following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here. And this is, of course, the 30th. Tomorrow is the last day of January. Quite a smack. The Dow is down 200 at 19,892. S&P is down 24 at 2270. The comp index is right now right there. Comp index is down 77 at 5583. The VIX index is up 2.22. That's up 38%. Wow, that's huge, up 12 at 12.80. The trend, I had a question about the trend. I haven't any signal yet about the trend, so if that's the question, let's just go look at the E-mini, down 23. Now, this is going to be very interesting for me. What happens the rest of the day? Absolutely important. Why? Because I could have had an alternate count that this is E/B and this is an F/C. I would have said that if we took out this candle low, the candle of the 24th and the E-mini of 2259.50, that there's a real good chance I've got to call that a peak F. But let's just give the day and let it play out. Meantime, as I said to subscribers, we're real close. I'm anticipating that sometime this week we get some kind of a top, short-term top. Meantime, look at the E-mini. It made a beautiful move to the upside at a peak F in the Chapman wave methodology. That's what we look for. What happened? Why did it just go clink? Excuse me, I just need to stop for one ad. Add it. I need to just double check something. Yeah, I guess that was. You are sure? Actually, yeah, sorry, I heard a clunk go and I thought that there was a position that I had which should have been doing very well from the last moment I put it on. Well, I'm just going to say yes because I can't be doing two things at once here. So what we're looking at is that the left side, right side test of this H pattern in the E-mini, having made a peak F top in the Chapman wave 5, has pulled back very sharply to another 5 on the downside. Now, is the low that we've just seen at 2263.25 a substantial low because we didn't quite get to the 2259.50 double bottom area back from the 24th? It could go even lower to the 2251.75. But what is important is that if this is a 5, there should be at least a pretty good bounce taking the E-mini from 2267 somewhere to the 2271 area. Then we'll reassess. Let's see if that happens during the show. Let's go on. I want to get rid of this here, the 120-minute show. I want to show you something very interesting. So the dollar, look at this, the dollar DXY. The dollar keeps trying to rally off that low from the trough D. And within that context, what we're looking at is very upsetting. I think somehow I got stopped out of a position that was doing well. How did that happen? All right, doesn't matter. All right, leg A, this is gray A in the dollar. There it is. And what we're looking at is from the 99.79 low. Remember, my contention has been that if the dollar starts to trade in the 99s, that's a real problem. Because what it's going to do is going to show that gold, G dollar, here we go, gold has held very well after the peak F top in the daily chart, in the single leg A up. And if this week there's a consolidation without breaking 1180 in the dollar, in the gold contract, continuous contract, that'll be very important. In fact, if there's a rally towards 1235, 1235, 1222. No, I don't think it even has to be there. If there's a rally from 1200 level that even goes to the 1218, that's suggesting that we're going to retest the high that was made in the gold contract at 1222.80. Very nice action. So now let's get back to our story. And our story says that within the context of the euro has made a peak E, and just like the dollar, it's holding very well. Somehow or other, the MACD has not crossed negative at all. The stochastic has gone below 80%. Let's keep your eye on this left chart right here. Let's do that one more time. That's the euro dollar currency pair. And now look at the gold contract. The gold did see the MACD touch, didn't cross negative, but it did touch. And the stochastic went way down to 50%. So the euro, in a sense, is acting much better. And it's suggesting that the dollar is having difficulties, and that 99 level is going to be very, very important. All right, let's go on, and we're going to look at crude oil, CL, crude oil right there, trading down 60 cents, stuck in this range. Remember, I spoke about the range between about the 55s and maybe the 51s. Just at this particular moment, a break of either side would be very important. What is very important here is that within the context of markets, we're looking at the TLT just stuck. It went to a peak C in the Chapman wave. Usually a peak C failure is not a good thing, but this one has held very well. That single leg A up, still going to test. I have to just tell you that if the TLT, that's the Lehman 20-year T-bond fund, if it takes out 118 support, got to be real careful here, because look, TNX.X is now the 10-year. We got the 10-year has made a high-level consolidation. This is the 10-year yield. The one I showed my subscribers over the weekend was that the three yields, that's the 30-year, the 10-year T-note yield, and the 5-year T-note yield, are having a high-level consolidation. They've not given up those highs, so they're stuck in this higher range. So we're going to be watching this real close. To make it real simple, the 10-year, if it breaks 26.21 decisively, I got to consider that it could break out even and go higher. And if it takes out the low that was made of 23.09 that was made the week on the 12th of January, that's going to suggest, finally yields are going to go much lower. Meantime, I just think it's kind of stuck there. All right, now let's do something else. And I think that this is, a question. Chapman wave. My alternative S&P daily Chapman wave count in PG counting up from November. Okay, let me just go there now. SPX.X. Yeah, this is alternate count. Either it's a G/C, and I'm going to have to think it's a G if we take out the low of the 23rd and go under 22.57. Just make it real simple. At this point, I still think there's enough energy in the week to try to make a nominal new high. But here's the issue. The Dow has to go to 20,126. So that's going to be the big deal here. So I really must be careful. I'm going to put in an alternate count. This is an E/B. Let's just be as strict as possible with the notations. Notation says the MACD is deflected low. It's not that good. The price is held beautifully up until now. Stochastic still at 87%. That's good. I don't want to fight that. That's still very good. Okay. Now, a couple of things that we need to look at. You see the QQQ series? Look at the QQQ. Peak T with two little doji candles going to the all-time high, but leg C in the weekly. That's going to be important. Look at the semiconductor index. The SMHs, peak D, but the MACD and stochastic are still holding very well. That's why I think there's a little bit more to go. Basil Chapman, Tiger Technicians. I'll be right back. I'll try to figure out what happened over there.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. So let's look at the IYT. Here's a question I got. What about the IYT? Well, the IYT is the iShares Dow Jones Transportation Average. It's made a peak E. You know, as I was going through charts and charts and charts over the weekend, and then I went through Investors Business Daily, my thinking was that some of the indices appear to have made a peak that might be a peak of some significance by this coming Friday on the weekly chart. And other charts, so this went 171.16 was the high on the 9th of December, and 171.15, so it missed it by a penny. And yet it still went to a peak A, B, C, D, E, and now it's pulling back sharply from the E. So the IYT suggests to me that there's a potential little double top here, and that's the reason why I say just a flurry to be able to get the market slightly higher is a possibility this week. And then we've got to be real careful. That's the way I'm looking at it. Now let's just go through. So that's IYT. The QQQ, as I said before, leg D, 2 dojis, pulls back sharply, now holds the support level of the 9-period moving average plus the up channel resistance. That's now support. Very important that the QQQ series goes above 125.92 this week, because if it takes out 123, it's at 124.50, down $1.30. If it takes out 123.75, the next moving average support, that's just not a good sign at all. So I think my sense is that we've probably made a pretty, I wouldn't call it a significant low right now, but we're in the area of the retracement that could have taken 2 days. One of the things that I showed my subscribers, did a lot of work over the last week showing the parallel movement between these 120-minute charts. Same chart, the Dow. One has a Chapman Wave 5, it's made a 5. We spoke about that last week on Friday, and that was at 11:30 on the 26th. It went to 20,125 and started pulling back. What's really important is that it made a peak D in the 120-minute chart that has the moving average, the MACD and stochastic. That turned down negative this morning, and the stochastic's now at 77%. So this is going to be very important. This low going from a trough A to a huge trough B, if there's another in the next 120-minute chart, if there's a move above that doesn't take out the low of the day of 19,870, we could be finding that this is, in fact, just a short-term basing phase that we'll know by tomorrow this time if it hasn't taken it out, but instead the market is now trading in the 19,000. The Dow is trading in the 19,960s or higher. That'll be very good. And I'm still upset that I got taken out in long position. I have no idea why. It was such a good entry point right here. The lows. What can I say? Okay. So what I did show my subscribers was this. You see the patterns here? You see the mirror image in this 120-minute Dow chart and this 120-minute volatility index chart? This is a leg B in the volatility index. You don't want to mess with that. Up 17%. Well, where did I get that other percentage before? Okay, well, it's up 17%, up $1.89. This is leg B. And this is also fascinating. Why? Because look, what we were studying before was the pattern. You see the way it makes a circle between the overbought condition in the 120-minute Dow and the oversold condition in the volatility index in this 120-minute chart? And now it's done the same thing here and the same thing there. And it was doing the same thing there. Look at those peak Ds, each peak D. Now I can put a down arrow, each peak D. How important is the peak D in the Chapman wave methodology? I don't have to say a word. Just have a look at them. Peak D right there. Look at that pullback. Peak D, look at that pullback. Look at this pullback from Peak D here. However, what is really important about this is that this is the steepest move we've had in the volatility index in quite a while. In fact, I can't even see one. This goes down. I can't even see one going up this quickly. I think it's now somewhat overbought. I think that the selling was a little too hysterical. And now I think we're going to see chop, chop, chop with slightly higher highs and higher lows as kind of the order of the day going into tomorrow. That's my thinking. Thinking is different to actually seeing it happen. And this, I put an up arrow here because the MACD and everything turned around nicely. I really think I need to change that. I have to be a little bit cautious here. Even though it's at 87%, I need to put this as a plus sign for now. Just having pulled back that deeply, my thinking here is that I have to be careful enough to say G/B, show me that I'm wrong and that you are, in fact, a peak B by going to a higher high by Thursday of this week. All right, there we go. Make it simple. Now, this is going to be so fascinating. Look, the IWM we haven't seen many of these before. A peak C1, C2, C3, C4, and now it's testing once again that support line in this down channel. And it might even hold, and that's going to be the clue. If the IWM, the Russell 2000, trading at 133.80 down 239, actually can rally above 139.50 by, let's make it Thursday. That's going to be important. My thinking is it's telling us that the general market, with the Dow being the leader, is going to be problematic. I had a question about the BKX index. Here we go, BKX. Yeah, it's just kind of stuck in the sideways trading band. Peak E in the weekly is the most important thing to consider. I think the upside, while I see some upside, I think it's a little bit limited. And let's go to the question that I had was, how's Goldman Sachs doing? Well, Goldman Sachs right now is pulling back. It's got that arch formation, the lowercase h. It's going to be I don't think Goldman Sachs at this particular point is going to be a leader until after it's corrected, and then it'll come back again. It's got that peak D in the weekly chart. It's down 420 at 232.75. Now, what's fascinating about this whole move is that there was another question that related to what I wanted to discuss. Yeah, if you look at Bank of America, BAC, it made a potential peak E the other day. Just keeps making these nominal highs, and then it turns down and it can't hold it. So I'm going to, just for now, call it an E in the daily chart. The weekly chart has it. Oh, this is interesting. I thought on the weekend I'd updated this. Oh, that's right. I had my service collapse and a change. Yeah, that is a D. So we've got ourselves a D in the weekly chart of Bank of America. This is why I'm starting to be a little cautious. As I said to subscribers, we'll start adding to the short side. And the monthly chart is still fabulous. Weekly chart is really good, but if this is a peak D, we could have a chop, chop, chop sideways move. So the financials are consolidating big recent gains. The DAL, which is Delta Airlines, plunging today down $1.91 down at 47.79, made a peak D in the weekly, a leg D in the monthly, and a peak G in the weekly and the daily. AAL, which has been absolutely on fire, is on the way down, making a peak D weekly and a D daily. So this is saying to me, yeah, and you remember Federal Express, my recommendation was, and let's see what it's doing, was that if you were in the options early on Friday, I said maybe you can buy a few more right at that price, but be careful, don't get carried away. Well, today's down $4 at 191.84, and this is telling me about the choppiness that we can expect. There's still buyers out there, but there's another aspect that you've got to consider, and that's we've rotated through all the different sectors to get to some kind of topping action starting on Friday, maybe going into this week. I'll be right back. Basil Chapman, Dow's down 9.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So the question that I had about the trend, let me just deal with it. The trend had a high today of $1.84, days young. So far, I don't have a reading that suggests that there should be opening weakness in the Dow. That's one of the things I'd be... No, sorry. What would happen is if there was a move, a certain level that I look at, if it was higher than that, then I would be saying within 2 days, there should be a really strong 9 to 11 point E-mini bounce. Haven't got that yet. That's what I'd be looking for. So the question's a good question. Is that a move for an oversold reading? Let's see. Good morning, Basil. I'm looking at the move in the trend this morning. That's the short-term, that's Richard Arms short-term trading index. It's trading right now at 162 up 59. And this morning, and asking if you would please comment on it during your show. Is this big enough move for an oversold reading? Thank you for all you do. Your student, Chris in Chicago. So, Chris, my thinking here is that within the context of the numbers that I look at, I'm not putting it into the category yet of at least giving me a reading. That's absolutely not to say that it couldn't happen. I'm just saying I don't have a reading. It must be an official reading. Okay. Now, here's the other thing. In the Dow, you see this move that I've got the B. I really should do this because I was going to do it, and then I thought, no, I'm pretty confident, not that confident anymore. And in the, let's see, in the E-mini, I'm sorry, in the cash S&P, there should also be, that's an EB in the daily chart of the Dow, and a GC in the daily chart of the S&P. However, a new high goes to a D in the S&P. A new high only goes to an F/C in the daily. I'm going to have to make decisions about this. There's just something going on here that says, could be wrong about it, but the way the chart pattern formed, the way I'm looking at everything, I think there's just going to be enough energy, I believe, to be able to start a move that possibly gets us to a new high in the Dow. Then I'm going to have to make decisions because almost all of them will have lined up. So here we go. I'm talking about the OEX. Was it the OEX the question was? OIH. OIH. OIH is the oil service, market vectors oil service ETF, sharp plunge in the dreaded H pattern failure. Wow, look at that. There's your H pattern. There's your failure. So it comes down, makes an arch formation, fails, whips right through the left side low. If it cannot close above 33.23 within 2 days, very negative. It says it's going even lower. There's your E/B. Now it's looking more like an E. And it went to the 200-period moving average. Now it's being repelled. If it didn't break below the 9-period moving average, I say, you know what, we could bounce back to the 35.25 level, down 32.91, down 123, down 3.6%. I'm looking at this and I'm saying, hey, not good action. I don't like, in fact, when the oils are turning down like this, because the market kind of likes moving up with the oils and down with the oils. And now the crude oil is down 58 cents at 52.89. As I say, stuck in this range. So we're going to be watching this closely. Now we want to look at high-grade copper. Peak D. See, there's just too many things here that are making me a little bit cautious. Peak D in copper, but it's still within a trading band. Got to the 200-period moving average in the weekly, and now it's pulling back. 2.596 will be the key support. It's at 2.649, down a little bit, down 1.47%. And now this rectangle that I drew a while back, quite a while back, is going to be very important. There it is. Okay, so what am I missing? I'm missing the question about rig. Rig. Everybody likes rig, except for now. Peak D, remember I said very quick, ABCD. I discussed a whole aspect in the Chapman wave methodology. I don't know, sometime I'm going to have to do a course and just to give a master trader series or something where I can show you these patterns, how important they are. Remember I said if there's an inside buy mode that concludes below the previous high, peak of significance. In this case, in rig, it was on the 12th of December at 16.66. And you have another rally, a full-grown rally that goes to a D at 16 point. Wait a minute, that was 1666. This is 1616. I'm getting this mixed up with all these 16s. So 1616 on the 12th, a month later in January, and kaplop, it goes all the way down, trading at 1406, taking out the left side low. If rig cannot close above $14.15 in the next 2 days, be careful. It's going to pull back even deeper. That would have to be an E rather than a B. Right there. Let me put it in. Gosh, I just don't like doing this. But if that's the way it is, remember, your only obligation in the Chapman Wave methodology is not to berate yourself for making a mistake. It's for identifying as quickly as possible to get back on the saddle, look right in and say, this is where I am. This is my conviction of the latest notation. Now, in the latest notation says we made a peak D in the 2-minute chart of the E-mini. You went all the way from the low of 263.75 to a high peak D, left side, right side price time match, just missed by 1 bar at 11.16, going to 22.69 for peak C. Then it went up to peak D at 22.69.75 at 22 minutes past 11, and now it's pulled back quite sharply, not very sharply, just quite sharply, and it's going to be important because now the next rally has to begin, because if it doesn't do that, if it does not take out by when my show is over, at that point you should be testing or breaking above 22.69.75. If it gets to 22.70, that's very positive. Fails to do that, it's going to say, hey, this is going to be a tough day. My 22.71 75 to 22.71, sorry, 22.72 will be the upside target if it does take out that high that was made just a short while ago. All right, now a couple of things that we're looking at here. Let me show you another aspect of what I wanted to say. Oh, the XRT. Here's the question again about the XRT. Not my favorite index. It's really just a terrible index. It's the S&P Spider S&P retail. It's down at 42.49, down 21 cents. Made a high, peak D in the weekly chart right there at 48.26. I think it's going to be in for a tough time. That's my impression. Look at the RTH, making the H pattern. So far, it hasn't taken out the low of the 30th of December, 75.79. Today's low, 75.72. It did take out the low. It took it out by 7 cents, and now it's trying to close above it. That's going to be important. You have to see that, otherwise there's a big problem. And the weekly chart, look at that inside track support level, very important. Let me just have a look at this. Oh, look at that, nice move up in the E-mini. Let's see what happens. All right, well, let's get back to our story. So a couple of questions. Correlation mixed at best. Yeah, I agree. P in the Den says crude oil correlation is mixed at best. There are many who believe lower oil is supportive now for markets. I really look at it as more, how's the IYT, the transports, how's the XAL acting when crude oil pulls back? And the XAL is actually acting terribly. It's made a peak F in the weekly chart. This is the airline index. Now, I don't know if there's an alternative count, if this is really a leg B in the monthly, but look at this. 115.55 on December the 12th. It's trading at 107 now. That's not good news. Down 8 points, 8%, 7%. All right, I'll be back. Basil Chapman, Tiger Technicians Hour. We'll look at some of the IBD, Investors Business Daily charts, as soon as I get back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Good question I had here. Let me just double check. 59, 56. Yep, it is a peak. Carnival Cruise Lines. You know, Carnival Cruise Lines, they must run, I was going to say, they must run an outstanding ship, but they do run ships. I don't know how they do it. They get hit with this, you get all these different infections and bacterias and whatever it is. They have accidents and they always land up upright. So they must, as a business, they have to be absolutely marvelous. I've heard stories, but there must be marvelous business people. Marvelous. Because, God, what a tough hoe to run. So I'm busy doing a little analysis here, and what I'm seeing is that it's at pretty much all-time highs. Let me just double check. Is that all-time highs? Squeeze, 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 squeeze. Not at all. All-time high was 54.48 back in January of 2005. Oh, and the high, 54.48. 50, is that a 7? Yeah, 57.79. All-time high last week. Now that all-time high is either an E or a B. At this, I would over the weekend would have said, you know, from the action, I'm going to give it the benefit of the doubt. The MACD is rallying, stochastics at 81%, choppy but 81%. It's had really good action. It gapped up. It must have been on news a few days ago. It hasn't held it. It's gone into the gap. It's gone below that high of 55.88 on the 25th of January. I'm thinking that there's still room left on the upside for this. I think it's acting very well. I don't know what the wave count is. Is this new leg B or is it a G? I'm going to call it a G/B for now. Nothing to do other than to say monthly chart says it's bumping into resistance. Weekly chart says, let me move this away, on CCL, trading at 55.93, down 36 cents. F, it could have had an instant restart. It has all the characteristics here. Look at that. Within 2 bars. Look at that. Within 2 bars. Took out, but that's fine. There it is. 1, 2. Bam. And it has potential for an instant restart. MACD is strong. Stochastics at 85%. So far, all I can say is this is looking very good. If you read about if any of you get the newsletters and all that from the, I've never taken a boat cruise, but I get them because I did the booking for my brother once on a big cruise, and therefore I get all that information sent to me every day, every week, from all the royal, whatever it is. So it hit the trend line. It hit the trend line in the daily. All I'm going to say is, if you're long, I would stay long. I'd like to give it a little bit more room. It's at 55.92. I'd like to say that it closed below 54 says, uh-oh, could be going down to test the 52s. But what I would say is it's had a spectacular move, and if you've had really good gains, think about doing one of two things. Either put a stop on at least a small position at about 55.20, which is the 9-period moving average. You can always put that back a little later on, but you should reward yourself for a really big move. Choppy to the upside, but it's gone to the upside. And the other thing is this. Would I short it? I don't think right at this moment. I might change my mind in 2-3 days' time. But I think right at this moment, I'd rather not be looking at it as a short. It's been one of the stronger areas. Okay? So now, and then another question I had was, excuse me if I can just find it. I missed it. I saw it. GT. Yeah, there was a question that I missed on Friday. All right, I don't want to waste time looking for it. There was a question, I believe. Oh, that's right. It had to do with the high beta stocks. So let me just do this. NVIDIA, number one on Investors Business Daily, NVDA. NVIDIA made a peak G at 119.93 on the 28th of December. It's making an arch formation, but it's really struggling, and the weekly chart has this peak E with a long-legged doji candle, and it says that if NVIDIA at 109.57 down 220 is able this week, it must be this week, to get to 115.5, that's 6 points from here, that would say, yep, it's going to test the high. But in the meantime, it's got a leg D in the monthly chart, and no new high by tomorrow makes it a peak D. It's saying NVIDIA, one of the great stocks, is just starting to take a time out. Next one is Ascent Group, ESNT. ESNT spelled Ascent wrong, in a leg D. And this leg D suggests to me, with the MACD at 90%, and with the MACD strong and the stochastic at 90%, that we've got to watch at 34.35, it's up 4 cents. We've got to watch this one very closely, Ascent Group mortgages. In mortgage business. Why? Because if at 33.68, it took out the left side, right side cup formation, but if it breaks and closes for 2 sessions out of 3 under 33.50, I'm going to suggest that it's made a peak, making a peak D in the weekly chart, and that you've got to be somewhat careful. And that if you're long, I would be taking a little bit of profit off. I'd actually be taking it off right now by the look of the chart, just a little bit off to say, hey, it's had a great move. Maybe you want to put that back at about 33.20 to 32.70. But yeah, just take a little bit off. Now, the next thing is health equity, HQY. Now, this is a fascinating chart. Health equity, what do? They have a platform for tax advantage in healthcare. So it's made a peak D, it's pulling back, it's in the daily. It's got a leg D with a long-legged doji. If it closes under 45.57 this week, that's a negative, and says 44.29 is the 9-period moving average, but it's only leg C in the monthly chart. And this says to me, let's just keep this on the watch. I don't want to be buying it right now, but I would love to look at it again if it can get anywhere close to the 44.60, 43.80 area, and then say, hey, maybe it'll be time to look at that stock as a long. The next one is Ubiquity Networks. UB what? Got a QT? NT. Peak E, pullback today, had a fabulous move, high-level consolidation, leg F/B in the weekly chart, monthly chart only in B, Ubiquity Networks, Air Fiber Wireless Networks. I think this is a great looking stock. I don't want to do anything because it got the same pattern I'm looking at in the other indices. It says it's spiked up here. There's a really good chance if it gets into the body of this trading range between 625 and 56.70 and trades there for a while, it might be taking its time forming a base. At this particular point, would I go long? Would I go short? I'd have to say that my bias at this particular point, even though it's a leg E, is to think of it more positively. I would not be shorting it, but I would be thinking if it pulls back a little further, is it something that I would treat as a trade? Next one, as we go into the break, would be Evercore Partners, EVR. This is Basil Chapman. Let's just do this peak F in the daily. Let's just go to a 120-minute chart. Nice move up, continued higher. Look, there it is. Going to test the 2271s. Nice. I'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hey, good one. This is Terry in the Den. ServiceNow. I said now looks good. Now it does look good. ServiceNow Inc. Cloud Computing, leg D in the monthly, leg E/B. Looks more like a B to me. In the weekly chart, and daily is at peak C. Yeah, I think so. It's trading 89.94. It's in that whole cloud area, which is doing very well. Is it a buy right now? Almost is at all-time, just about all-time highs. The all-time high was 93. 92.98. and it's trading at 89.96. Yeah, for a leg D, and then you can just hold a little bit and see what happens. But the gap up and holding is quite good. So yes, I look at it. I look at it very positively. Would I, to tell you the truth, buying long positions right here, I would rather let this whole thing play out for a week or two and see how we can digest the gains. But absolutely, if you wanted to nibble at $90 on now, I would say you could do that, put in a 1-point stop, and if it breaks above leg C for peak C for leg D, above 92.98, just raise your stop, let it go where it's going to go. But it's in that area. A lot of the cloud IBM now is doing well because it's considered more cloud computing. IBM pulling back today after peak D. See all of these, and this is the same thing in the weekly chart. This is a G/B. I think it's a B in the weekly chart. So okay, so we're about to wrap up. Let me do a couple of things. Let me go to the charts that I need to look at. Here's the Dow chart. So we saw stronger, then weaker technicals, and then a nice turnaround. But the MACD is deflected lower with the price. I'm always a little concerned about that. I need to see the MACD crossing back positive. In the meantime, stochastics at 88%. That's very strong. Even more important about this is that within the context of the markets, I'm looking at the Dow just under the 9-period moving average for the first time in about a week. And as such, I got to say, hey, get back above. I want to see it close above 19,000. It's at 19,965. Sorry, the 9-period moving average is at 19,965. I want to see it close nicely above that by the end of the day. And then I'll say, hey, good, we've got a little nervousness. It's exactly what I want to see. Now we can move slightly higher. And then we've got to be very careful because I do believe we've seen some kind of a rotation going on, a kind of a distribution in many ways. Now, of course, you've got Facebook earnings come out. I think it's Wednesday. It's made a peak D. It hasn't gone to 133.51 for a new all-time high. You tried to do that. Did it do that? I don't think it did. The high that was made at peak D on the 26th was 133.14. Missed it by half a point. So now what we're looking at is Facebook has had a spectacular move. I would not be surprised if Facebook's going to face a choppy period coming up, but a trading band, because it's still one of the great companies. So a trading band between maybe 135, unless it spikes up huge on Wednesday night into Thursday. But I think that the 114, 113 area should be really strong support. So it could go chop for a little while. I don't remember now what the others are that are coming out. Is Google coming out? Is that Google made a peak C? This is very unusual because that should be a G/C. This is a deeper correction than I expected. Peak D, if there's no new high this week. I'm going to be watching these stocks very closely. My thinking here is that there's been some fabulous expansions to the upside, and that now we've got to be somewhat careful of a sideways to choppy move to the downside. Didn't get to many of the IBD stocks that I want to. Maybe I'll do some tomorrow. But in the meantime, be a little bit careful. I'll be a little bit more. We are on the long side, have good positions. A couple are holding very well. A couple have got stopped out of still very small losses. I'm prepared to do that right now, but I'm thinking that I'll be adding to the short side as the week progresses. Thanks for being here. I'll be back tomorrow. Check out my opening call. And yes, we're still long the golds, the miners, and the gold stock that's done very well. I'll be back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.